Aloha everyone, it's Rick here with goodincomestreams.com, and we'll be talking about how I managed to beat the annual average of the stock market by making 10% in less than 4 months. Now, if you are enjoying this video, please leave a comment below, and also don't forget to hit that like button and subscribe. Also hit the notification bell so that YouTube will notify you the next time I upload a video.
Now I know that sounds like a really bold statement, but it's a fact. And what do I mean by it? As you can see on this check that I got from Henry County from Indiana, this is an actual redemption of a tax lien certificate that I purchased a few months back. And guess how many months it took me to get this check? 4 months, actually less than 4 months. I got this tax lien certificate for $656. Yeah, it's a small one, but guess what? I still got 10% on everything that I invested. Now I'm going to go into an article from thebalance.com in regards to stocks. According to the article, the stock market's historical returns can show you how much volatility and what returns you can expect over time when investing in the stock market. According to the table below, which I'm going to scroll down to, you'll find the historical stock market returns for the period of 1986 through 2016 in a calendar year basis.
Oh my God, what is going on? I am just stuttering. In a calendar year basis.
The article even goes on to say that the negative stock market returns occur on average about every 4 years. So you have a negative cycle. You end up with negative returns, meaning losses instead of returns, instead of gains. As you can see, the historical S&P 500 index stock market. Now, if we look back from 1986 to 1990, if we was to compute it, it averages about 13.78% for those 5 years, which is a great return despite having a negative return back in 1990, negative 3.1. Now, if we look at the next 5 years from 1991 to 1995, it averaged out to about 17.42%. It sounds like a lot, but if you look at 1991, where you did 30.5%, and then in 1995, 37.6%. But after you average it out, it only comes out to 17.42% for those next 5 years. And if we total from 1986 to 1995 and we average it out, it only comes out to 15.6%. Yeah, you're still getting a great return if you really think about it, but it took you 10 years to average out 15.6% to make up for the negatives and for the really low returns on some years. Now you might be wondering, why on earth are we talking about stocks when this is about tax liens? Well, I'll explain in a moment. Now, getting back to the historical returns of the stock market, if we look at the next 10 years from 1996 to 2006, the average return is 10.75%. The first few years are great returns, but if you decided to invest starting in 2000 till 2002, for anyone to just want to quit the stocks, because if you look at it, you had negative 9.1 in 2000, negative 11.9% in 2001, and a whopping negative 22.1% in 2002. Those are some huge losses for those years. If you started investing in 1998 or 1999, where you were getting 20+% and all of a sudden you were hit with all these losses, most likely you would want to quit. I mean, if that was me, I would quit. There's no way I would stay doing stocks after losing 22.1%. Now, what if we just look at the last 10 years of the table from 2007 to 2016? Now, I know I'm skipping 2006, but let's just do the 10 years first. When we look at those last 10 years, it averages about 8.76%. But if we was to add the 2006 and make it 11 years instead of 10, then you come out to about 12.28%. Now, that is a great return. Now remember, I don't like to invest in anything less than 12%. So with this one, I'm actually really happy at 12.26%. I would be ecstatic if I was getting returns like this year after year after year.
If you are enjoying this video, please don't forget to hit that like button, as this video takes a lot of my time to put together. Also, don't forget to hit that subscribe button and hit that notification bell so that YouTube will notify you the next time I put out another video.
Now, some would argue that there were years that the stock market hit over 20%, and there were even a few years that the market hit over 30%. Now, those are some phenomenal returns if you ask anyone. Any investor that was getting that kind of returns would ride that market all the way. However, if you really come to think about it, those returns didn't happen year after year. You also have to take into consideration that you have to keep investing month after month, year after year, just so that you can get that average return. If you were just to invest your money one time and expect to be getting returns like this, well, you won't. Also, according to the article from 1973 to 2016, the average return is only 11.69%. That means your money had to be in the stock market for 44 years just to get that 11.69% average return. Now, granted, you had better years than others, but what if you were one of those people that was set to retire around 2008, only to find out that your retirement or your investment for your retirement was completely wiped out? Or what if you were one of those people that was scheduled to start drawing from their investments, only to find out that they lost more than half of their investments? Now you start drawing from something that's so low, you will run out of money very quickly. And most of those people were forced to go back to work just so that they can survive, because their investment could not last them for the rest of their retirement years. This is why I love tax liens. And that is because your investments are guaranteed to return from anywhere from 8% to as high as 25% or more. I know some places you can actually get about 36% a year. Now remember, these interest rates are not set by you and I. Instead, they are set by the government of that state where you are planning to invest on. Now, depending on what you like for a return, like I mentioned earlier, I prefer to have at least 12% or more, and I've mentioned this in my other videos. And this is why I love to invest in Florida, because they offer 18% every year. Also, I prefer not to do auctions. Instead, I like to do the over-the-counter, so that way I can get that guaranteed 18%, instead of going to the auction and getting caught in those bidding wars where you end up going all the way down to 0%. Well, to be honest with you, I would never do that. I wouldn't even go 5%. I wouldn't even go 10%. If I was to go below 12%, I usually have to hit myself in the head and tell myself, hello, you're going below 12%. This is why I stay away from auctions. Instead, I go for over-the-counters. Now, granted, I still do go to auctions. I do online auctions, but that's not because I'm trying to get a tax lien certificate. Instead, what I'm trying to do is I'm trying to get a tax deed, which is for another topic.
Before we continue, if you have any questions, please leave in the comments below. And if you could also hit that like button, it'd be greatly appreciated if you're enjoying this video. Also, don't forget to subscribe and hit that notification bell so that YouTube will notify you the next time I put out a video. Now that we've talked about stock markets and how it's ups and downs, let's talk about tax liens and how you can get a guaranteed return every single year. Now let me show you a few returns on some of my tax liens that I've purchased in the past. Now sure, when you look at this, you'll see that some of them are quite old. That's because I stopped investing in tax liens for a little while because I concentrated on the tax deeds, which I'm going to be talking about on another video. Now if you look at some of these tax liens, you can tell that I've invested in Florida. Now I can show you exactly how you can do this stuff, and I will create another video about that. But it's pretty much, if you look down, if you scroll down to these, you can see that I've made pretty much 18% as an annual return. Now some of them are a little less, some of them are a little bit more. That's because some redeemed in less than a year and some redeemed over a year. But it's still, the annual return comes out to about 18%. Now if you are enjoying this video and you think that you want to learn more in regards to tax liens, please let me know. I'll be more than happy to put out another video in regards to that.
By the way, if you have any type of questions, please leave it in the comments below. Also, if you could hit that like button, it would be greatly appreciated if you're enjoying this video. And don't forget to subscribe and hit that notification bell so that YouTube will notify you the next time I post a video. Question of the day is, will you continue investing in stocks, or will you start investing in tax lien certificates where you can get a guaranteed interest rate of as low as 8% to as high as 25% or more per year? I'd like to say mahalo for watching this video, and remember to always strive for financial independence. And until next time, aloha!